Hello and welcome from Trend Signal for a review of the data and events the week beginning the 20th of January. Following on from a fairly quiet week really last week, certainly from the equities standpoint, where markets were definitely in pause mode following the very active week, or certainly in terms of data and events the previous week with the unemployment in the States and interest rate decisions. Today is Martin Luther King Day. That is Monday. The 20th is Martin Luther King Day. Banks are closed in the US. It's a federal holiday, but markets will be open, some with reduced market hours. The effect is probably a reduction in liquidity, which does mean that if something does happen, that you will see possibly excessive moves, as it doesn't have the liquidity to hold it in check, as it were, at the markets. So certainly worth spending screen time this morning and this afternoon. Last week, well, equities pretty steady, as I said, on pause. The main events of last week really were the moves in the dollar. The euro fell 130 odd points versus the dollar. Sterling, that fell about 0.5%, but the big move was the Aussie dollar, which fell over 200 points, some 2.5% against the US dollar. So the dollar definitely having the best of it last week. Commodities, gold, pretty much unchanged. I think about sort of $5 higher actually in the end. That's what just plus 0.4%. Brent crude, that was down another 100 points, so that's another 1% fall. And bonds continuing their climb with Bunds another 120 points higher last week. The tone this week, certainly this morning, is set by events overnight with the release of the GDP data from China, which expanded at 7.7% in the fourth quarter, which is a slowing from 7.8% in the third quarter, and it looks like the growth for the whole of 2013 will be 7.7%, which matches the growth for the full year of 2012. The Chinese economy is really having to convert from being very much an investment-led, debt-fueled economy to more of a consumer economy, and that is rather a painful transformation. And it looks like the growth in 2014 is forecast to be 7.4%, which will be the slowest pace actually since 1990, but not totally surprising. But the debt burden is a worry for the Chinese economy, which really started to soar, well before the financial crisis in 2008-09. And it's expected to be more than 200% as a percentage of GDP by the end of 2013. That data is obviously not out yet, but that really is a worry to the markets, and that's how financial crises start. Certainly how it happened in the Latin American countries, massive amounts of debt in comparison to GDP. So that is a concern. Let's get on to the data this week. We've already had the GDP data out in China. The next bit of data, and it's a fairly light calendar this week, will be the German ZEW Economic Sentiment Indicator. That comes out at 10 o'clock Tuesday morning. For those of you who are trading the euro, any stock indices, certainly European stock indices, DAX, Euro stocks, obviously the FTSE will be affected as well. We had quite a jump actually in December for the November number, which rose 7.4 points to 62, and we're forecasting another pick up again to 63.4 is the forecast for the economic sentiment indicator, as optimism abounds in Germany, which is the sort of lead economy in Europe. Some of the other peripheral ones are picking up, notably Spain. Italy is certainly lagging behind, but a long way to go yet there, obviously. Then we have the first of our interest rate decisions. We've got two interest rate decisions this week. The first one is from the Bank of Japan. That comes out Tuesday night, Wednesday morning. Well, the Bank of Japan's engaged in a considerable expansion of its monetary base, 60 to 70 trillion yen, a massive number. In dollars, that's 670 billion, which is well known by the markets. Looks as if they continue to battle the deflationary concerns and worries that have built up over the last few years, and that battle will continue. We're not expecting any change in rates, however, this time round, and there will be a press conference afterwards as well, and a lot more will be made clear by through that press conference from the governor of the Bank of Japan, Governor Kuroda. We then have in the morning our claimant count or unemployment data here in the UK, which is expected to see a further decline of 33,200 jobs, an unemployment rate expected to click down to 7.3 from 7.4. So all looking fairly good here in the UK for now. Then we have our second interest rate decision of the week from the Bank of Canada, coming out at 3 o'clock on Wednesday afternoon. Basically, inflation has been weakening in Canada, and that's one of the reasons why the Canadian dollar has been losing a lot of ground, certainly in the last 3 weeks since the start of the year, really catching up with the Australian dollar, I suspect. But as a result, though, I don't think we're expecting any change in rates from the Bank of Canada. It looks like they'll be keeping rates low, certainly through till the second or even third quarter of 2015, if the markets are to be believed. We then have US unemployment data in the States on Thursday, the regular weekly release, really keeping much with the sort of 4-week moving average, as it were, 331, but that's something to watch at 1:30 on Thursday. And then we finish with the existing home sales published on Thursday at 3 o'clock, a useful bit of information because it really is an indicator of how well the economy is doing. The housing market is important to jobs. Up to 5 people are employed for each new home built, and obviously all new houses need carpets, curtains, white goods, etc. So the existing home sales, whilst they're not new homes, they are related, and it's important to see a buoyant existing homes existing home sales data. Good, that's it for that week. We will reconvene on Thursday for our workshops at 8 o'clock. Thanks very much, and good luck for now. Bye now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.